News first, and this very special coverage of the GDP numbers out in a couple of minutes. I'm Neeraj Shah, and of course joining me as usual on a macro discussion on ET Now, consulting editor Maithili Basnirmat. I think we've got the numbers as well. And I was going to ask Maithili what does she anticipate, but we have the numbers, 7.1%. And you know what, I think that's a big disappointment because we were anticipating, our poll was anticipating a 7.7 number versus a 7.5% YOY and 7.9 QOQ. So on a YOY, we were anticipating some uptick. 7.1 is very close to the lower end of what certain economists were painting. You know, the range was between 7 to 8.2%, and the number is 7.1. FY17 GVA at 7.3, but so that's in line. GVA estimates are fine, they're at average, but the GDP number at 7.1 is starkly below estimates. Maithili Basnirmat, your initial thoughts. As of now, I have the two numbers, but the first reaction on the GDP numbers, 7.1%.
Well, as you said, Neeraj, it is at the lower end of the band that we had, but I think almost all observers will agree that we will not see the uptick that we saw in the fourth quarter of the last fiscal was unlikely to continue to the first quarter of this fiscal. So almost everybody did expect some kind of a decline from that last quarter number of 7.9% GDP. Yes, 7.1 is disappointing, but I think the second and the third quarters as we progress during this year, we will see a pickup because the improvement in agriculture's performance is unlikely to have been reflected in the first quarter, but it will definitely show up in the Q2 and Q3 numbers, and we also have the pay commission numbers coming in, so that will give a boost to the Q3, Q4, etc. numbers. So Q1, it was expected to have a slight dip, but 7.1, yes, it could have been closer to 7.3, 7.4, but I don't think one should quibble too much as long as the uptrend continues, and 7.1 is, I would say, is not bad going.
Yeah, we are waiting for some of the other details to come in, agri, industry, services, and all of those growths as well, numbers as well. And Maithili will be with us. Let's get in the first live guest on the show. Chief India Economist of Barclays Bank, Siddharth Sanyal, now joins in. Siddharth, so good speaking to you after a while. Thanks so much for joining in. Your initial thoughts, 7.1%. It's at the lowest end of the poll that we had clocked in.
Yeah, the headline number is a disappointment if it is 7.1 because we were expecting around 7.6, but definitely we need to see the composition of this particular number before really arriving at any conclusion. So the possibilities are like if it is a drag due to the agriculture sector, then hopefully we see some uptick going ahead in the next few quarters. But if it is a drag due to some of the other segments like services and all, we need to really then introspect deeper.
Yeah, so I have some other details as well. Maithili, I would want you to react to this as well. We'll get all the three headlines in a bit. Farm sector growth at 1.8%. Somewhere I saw manufacturing growth being reasonably healthy, if I'm not wrong. Mining was slightly shaky. I'm still awaiting all the other key numbers as well. But remember, I think manufacturing growth was expected to improve to 8%. And I think, unless I'm very wrong, I saw the manufacturing number much higher than that percent as well. So I think manufacturing seems to have done reasonably okay in quarter one. If indeed those are the numbers, Maithili, mining is down 0.4% versus an 8.6% tick. But manufacturing is something that I'm waiting for agri and services numbers to come out. But Maithili, any thoughts here? GVA at 7.3, manufacturing has been better.
Yeah, well, certainly, actually, initially when you look at the GDP numbers, it does seem disappointing. But increasingly, I think what we need to look at is the GVA numbers. And there, if you look at the GVA numbers, it was 7.4 in the fourth quarter of last year and 7.3. So it's just a very marginal dip. So I don't think one should get too despondent about the GDP numbers, because GDP numbers, mind you, are GVA plus net product taxes. That is net indirect taxes minus subsidies. So since that is the effect essentially of the taxes, one should focus on the GVA. And there, if you look at it, I think 7.4 to 7.3 is not much of a slowdown. And particularly if, as you say, manufacturing has done so well, then that I think is very heartening news, because agriculture, almost everybody expected the spillover of the 2 years of drought to continue into the first quarter. But if manufacturing, that come in, as if I understood you right, at over 10%. If I'm not sure whether I heard you right, but did you say over 10%? In that case, is very, very heartening, because manufacturing is where the jobs are going to come from. That is where the focus of the Modi government is. It's Make in India. And as you've seen, even the latest announcements about the residency, that's all with the idea of incentivizing investment and in jobs, manufacturing, creation of jobs. So if we're seeing manufacturing growing at over 10%, that is really very heartening, because last year the manufacturing growth was 9.3. Usually what happens, people tend to look at the IIP numbers, and here again if you look at IIP numbers for the first quarter, it was just 0.6%. But IIP numbers have always underestimated growth in industry. So as I said, I'm really taking heart from the manufacturing number, which I hope will confirm to me, Neeraj, is over 10%.
No, it was not over 10. But here's the bifurcation, and both you, Siddharth, and I think we've got a battery of other experts as well. Jayesh Mehta is with us too. I think industry has grown, services has grown at 9.6%. Siddharth, you want to take those numbers because you were referring to this. Services is at 9.6%, and industry, I think, versus an expectation of 7.4, has probably grown at 6%, if I'm not wrong. So these are the two numbers that I have with me right now. Siddharth, your initial thoughts on these?
Hi. In industry at 6%, and as per the new GDP methodology, is slightly lower than what we had been seeing in the last few quarters. So that's very clearly one source of disappointment. But at the same time, if the services number is at 9.6%, you cannot be too unhappy about it. It's a pretty decent number. And going ahead, the 1.8% number which you mentioned earlier about agriculture, there's a possibility of that number moving up slightly. So basically what's happening, that the 7.1% GDP number which you are seeing now, eventually you will see that number moving up slightly. So what is happening here is, if you take some kind of a rolling average or the financial year, you will still end up seeing GDP going up year after year. So the 7.6% number possibly ticks up slightly, marginally, but still moves up during the course of this particular financial year. But quarter to quarter, the growth path can still be uneven. So we are moving up, but potentially in an uneven fashion. That's the new reality at this moment. I think that's the more important part. And in case of the GDP GVA differentiation, one important aspect needs to be kept in mind, that the extreme low GDP deflator, which had been the case going ahead earlier in the last few quarters, will possibly not be the case going ahead, as inflation has started moving up even on the WPI scale. So more or less, we would expect the GDP GVA gap to be slightly narrower compared to what we had seen in the previous year in some of the quarters.
Well, we're also joined by Pranav Sen, the go-to man for everything relating to the CSO and GDP estimates, particularly under new methodology. Thank you so much, Pranav, for joining us. And I don't know whether you'd agree with me that, rather than getting worried about the decline in the GDP numbers from 7.9 in the fourth quarter of the last fiscal to 7.1, one should take heart from the fact that one should look at the GVA. And there, if you look at the numbers from 7.4 to 7.3, is not that bad going at all. Would you agree with me, Pranav, that one should look at the GVA rather than GDP?
Well, it depends on what you're doing. For quarterly numbers, if you're looking at how the sectors are performing, then you're absolutely right. But, also you have to remember that the quarter that we are dealing with, which is the first quarter of the year, is the quarter in which the maximum amount of repayments are made by the tax people. They over-collect in the fourth quarter and give the reimbursements in the first quarter. So that actually distorts the structure of the GDP a little bit. So on that count, you're right. But this result is pretty much expected. I've been talking about this for a while, saying that this quarter we should expect to see the tail end of the droughts of the past 2 years. And it's only in the next quarters that you're going to see the effects of the monsoons coming up. So the 6% manufacturing growth doesn't surprise me one bit.
Okay. Okay, then let me just get an Obik Barua, Chief Economist at HDFC Bank. Obik, would you agree with Pranab and with me also to some extent that we shouldn't get so disheartened by the numbers that have come out today, because we are going to get that boost from agriculture coming through only in the second and the third quarters, and as we progress down the year, we'll also get a boost from the pay commission numbers. So these numbers that we've seen today should not be taken, with too much of disappointment.
Absolutely, I agree with you, because I think there is some kind of obviously a tax angle to this, possibly repayments which got bunched up in the first quarter. Otherwise, it is difficult to explain the disconnect between GVA growth and GDP growth. And consumption, I think, has robust, although the quarterly numbers are a little difficult to, one shouldn't sort of go too much because.
Okay, I think we'll just have to fix that as well. But Jayesh Mehta, I'm told, is with us. Siddharth Sanyal is with us. Mr. Sen is also with us, and we'll just get to each of those. But Jayesh Mehta, let me get in your initial thoughts. GDP 7.1, GVA 7.3, and as I look at the internals, manufacturing at 9.1 and services at 9.6 on a YOY basis. Your initial thoughts?
No, so I think that very clearly shows, services and manufacturing doing okay, I would say. Definitely, the expectation was a little bit built up more in, but that's because the monsoon getting right, and but that, of course, will get reflected in Q2. And to that extent, we shouldn't be disheartened if we are looking at a forecast of 7.6 number for the whole year at 7.3 GVA. Which should be very, very fine for the Q1, because maximum growth we are expecting from Q2 onwards, and that's where we'll see the impact of the number. So, yes, I would say not a very great number, but definitely built in for this particular quarter. To that extent, second quarter, and on an average for annual basis, we go to 7.6. So basically, next 2 quarters, we are expecting it to be much better.
Okay. But Siddharth, would you agree that though Jayesh said, yes, it's not a great quarter, and overall it does look as if it's not a great quarter, but I'm taking heart to the manufacturing numbers. Earlier, Neeraj disabused me of the notion that it's, over 10%. But 9.1 is not very far from 10. Am I trying very hard to look at the silver lining? Or is it the fact that at 9.1 manufacturing growth, it's pretty good news for a country like India that has desperately wants to see manufacturing grow, because that's where the jobs are going to come from. Would you agree, Siddharth, that even though the overall number doesn't look that great, 9.1 is really good news?
Well, if the manufacturing growth rate is really 9.1% and kind of stabilizes there, it's a great news. Having said that, I would like to highlight one particular factor, that there has been a change in methodology. And earlier, your GDP manufacturing number and IIP manufacturing number used to be more or less in sync. That's no longer the case. It's a slightly different methodology. And last few quarters, what we are seeing, that compared to the IIP manufacturing number, the GDP manufacturing number, the growth rate is significantly higher. So that way, when we are thinking in terms of India's recent past of the last few years, etc., and trying to put things in perspective against that, 9.1, this 9.1% is perhaps comparing apples with oranges. So we should be careful about that, and we need to see going ahead where the number really pans out in the coming quarters.
Pranab, as you can see, the doubting Thomases remain. So there's the disconnect between IIP and manufacturing numbers. I think that was there in the past, and it still continues. But I think the manufacturing numbers, now that there's so much effort has been taken by CSO to explain the due methodology, and also to say that, well, for IIP also they're working out the value added method. They're trying to update the base from 2004-05. Can we take this number as hygienic, 9.1, and say that the integrity should not be questioned, Pranab?
Well, the thing is that the quarterly numbers that you are getting reflect essentially what's happening to the GVA in the corporate sector, because this is taken from the advanced filings that are made by listed companies. So this is really the listed company data that's coming through. the IIP continues to be used for the non-corporate sector. So what you're getting as the manufacturing number is a weighted average of the IIP and the advanced filing results of listed companies. So what it suggests is, given a weak IIP, the listed corporates seem to have done very well, and this should be fairly easily cross-checked with the data available on the SEBI website.
Oh yes, in fact, I think most of the listed companies, if you go by their Q1 results, have done quite well. Obik, would you agree that that is a very convincing explanation of the numbers that we're seeing in manufacturing? The explanation that Pranav gave, that listed companies have done well, and IIP typically reflects also the unlisted companies, and that explains a great deal of the discrepancy that we're seeing.
Well, as a general rule, I don't find anything extremely convincing when it comes to GDP numbers. I think there are a lot of issues involved, and with all respect to Dr. Sen and so on, I don't think there is a fudge involved, but I think there are problems where there is some degree of overestimation involved. But that said, I think his explanation of what is going on does square up with the numbers that we've got both from the corporate results, as well as if you look at things like margins that come out from the PMI sample of companies. All these corroborate the fact that the organized sector has done better than in the past, and I think this will continue, because if you look at most earnings or margin forecasts, there is expectation of improvement. I think the IIP is a fairly convenient but perhaps not an adequate proxy of what's happening to the unorganized sector. But I think it's sort of it is telling us something about this disconnect between the organized sector and the unorganized sector, which is itself something that needs to be explained.
Absolutely, but that kind of disconnect, I think, is par for the course for India. But Jayesh, if I can draw you in here, you said that you were not particularly enthused by the numbers, and yes, they're not particularly great. And you also said that for the year as a whole, you tended to stick to that 7.6 number. But the way I look at it, and I'm usually a pessimist, but now I'm suddenly finding myself very optimistic when I look at the disaggregated numbers, because agriculture is definitely going to do better than 1.8. Services will also definitely do better than the number of 9.6 that we've seen, because post-pay commission, you have a huge inflow from public administration. There's a big boost. So if manufacturing stabilizes at about 9.1 and thereabouts, and we get this uptick in agriculture and in services, shouldn't the GDP as a whole edge closer to 8%, Jayesh? Or am I just being too optimistic?
8% is always welcome, right? So, but I think the immediate target is, when people are skeptic about 7.6 or so. So that's what I meant. At 7.3, maybe next two numbers coming around 8 or 8 plus, and that's where you bring the average to maybe 7.6 or similar numbers, right? So from that perspective, yes, 7.6 is the base case which I will look at with the 7.3 GVA. Having said that, it depends on how the whole monsoon and the pay commission, spending really spurs up the demand. To that extent, it should definitely better. So, won't be surprised. 8 would be too optimistic, I would say, but definitely 7.6 now becomes the base case situation.
Now, Siddharth, I heard you mention in one of your replies that you expected even this number to inch up going ahead. And Maitli made a very valid point. We have, even though it's been receding, we've had, albeit a normal monsoon, and the 7th pay commission, 1 rank, 1 pension, and a few other benefits that come in all give the boost to consumption as well. My question to you is, what do you anticipate the next 3 quarters to do, and eventually FY17 GDP, average GDP to look like?
Well, our numbers are more in the range of mid 7% to high 7% in most of the subsequent quarters, though the path can be slightly uneven, as I mentioned earlier. So overall, for the year as a whole, for the financial year as a whole, we are at around 7.7% in the current financial year.
Now that we've almost everybody seems to agree that 7.6 is a base case scenario. Just recently in April this year, the RBI brought out a paper, a discussion paper, a working paper, which said that the potential rate of growth for the Indian economy has come down post the crisis, and the RBI working paper estimated it close to about 7%. So by that number, if one accepts that paper's findings, that means that 7.6 and upwards, the economy seems close to overheating. So would you suggest that the economy is overheating, or does that potential rate of growth estimate, of course these estimates are always questionable, do you think that potential rate that they fixed was a bit too low, Pranab? Well, let me just, since we seem to have lost Pranab, let me turn this question over to Obik. Obik, what I was asking Pranab is that since all of us seem to agree that 7.6 is a base case scenario for GDP growth this year, in April this year, if you remember, the RBI came out with a discussion paper on the potential rate of growth, and they estimated the potential growth at about 7%. Though recently we've had the RBI governor saying we're growing below potential. So who should we believe? The RBI's institutional paper which says 7% is a potential rate of growth, or the RBI governor saying we're growing below our potential? What do you think is the potential rate of growth for GDP?
Actually, I think that it is very clear. I think we should go by what the RBI governor is saying, and it is apparent in every possible marker of potential growth that you can lay your hands on. There is a lot of excess capacity in the system. There is very little pricing power for most manufacturers or service providers. There is evidence of increased unemployment in the system. And the methods to arrive at potential output are often very simplistic and use what I would call naive statistical methods of passing a very fine trend line through the past data. So I would go by what the RBI governor is saying, and I think that sort of received wisdom among the banking community, among analysts and so on, that we are significantly below our potential growth, because otherwise we would, the simple indicator of whether we are below or over potential is the kind of inflationary pressures that are being bred in the system. CPI has a couple of components that are sticky because of structural reasons. And of course, there is a food price issue. But if you take that out and look at pricing power in the corporate sector, manufacturing, and so on, or wage growth is fairly muted, and that suggests that we are below potential.
But can I pin you down, Obi, to a number? Yes, you say we are below potential, but what is the potential rate of growth as per your calculations, Obi?
I would think that the potential rate of growth is anywhere between 8.5% to 9%.
Oh, that's really generous. Jayesh, can I draw you in on that? Will you stick your neck out, and would you agree with Obi that our potential rate of growth is 8.5 to 9%? That's really, really good. Would you agree, or is he being even more optimistic than I?
I would be happy with 8, but why would one go with the April number of RBI? I would rather go with the latest number in the RBI annual report, which they are projecting at 7.6, right? So from that perspective, if you really look at in April, we didn't have clarity on monsoon. We didn't have we had a lot of uncertainty, and the recent annual report, which factors in almost everything till the last 15 days, right? And that is looking at 7.6, and that remains the base. Now, anything below that, overall,
yes, what the RBI, okay.
Yeah.
No, what the RBI annual report talks is the estimated growth of GDP for this year. I'm talking about the potential rate of growth. What could we grow at if we really were to utilize our entire capacity, if we were to be as productive as we could be? What is the potential?
Potential could be much higher, but of course we do have headwinds from the globe, right? So to be really looking at, of course, the wish list could be 10% double-digit growth in next couple of years. But one has to be very mindful of what's happening globally, and globally the growth doesn't look that great, and that will have an impact on us. So I would still say if we achieve 8, is great. Potential is high, but then we need a lot of things to plug in right for the potential growth.
Siddharth, let me draw you in on this. If 7.6 is the base case scenario, and we're going to be growing perhaps, hopefully in the other remaining 3 quarters, and it will bring our growth up to about 7.8, closer to 8%, what does it mean for policy? Is there a case for any kind of either monetary action or fiscal action? Because you also remember we have the FRBM expert committee looking at whether we need to have a band rather than a specific number. Presumably the government is thinking in terms of some easing of that fiscal deficit target. So is there really a case for any kind of monetary action by way of rate action, a cut in interest rates, or is there a case for any kind of fiscal action, a little looser fiscal deficit, if we are going to grow at about 7.6 to 7.8%? Siddharth?
Well, little bit of support from the monetary policy side and fiscal policy side, both are possible. Not necessarily I'll be taking the call on a higher fiscal deficit number for this financial year. My sense is that the 3.5% number which the government has spelled out in this particular year is kind of sacrosanct. They would like to stick to that particular number, but incrementally going ahead in the subsequent financial years, they will possibly like to have little more flexibility in hand, would possibly like to have a band within which they will target to keep the number rather than trying to tie themselves to one particular point estimate, number one. From the monetary policy point of view, yes, I think there is clearly room for more support even in the subsequent month. And now, given that from April onwards the RBI has changed their stance on liquidity very significantly, we should not narrowly look at the repo rate cuts or hikes only going ahead for monetary policy. The RBI stance on liquidity is equally important, if not little more important at some points in time. And our sense is that going ahead, RBI in the subsequent month, in the coming months, RBI will be supportive on the liquidity side, and if there is room, if the inflation numbers come out with a little more benign print, which we expect in the 4th quarter of the calendar year, we do expect some modest cut in interest rates, say about 25 basis points. But the support from liquidity side can potentially be pretty significant in the coming months.
Yeah, Mr. Naushad Forbes is also with us. Mr. Forbes, thanks so much for joining in. Now, firstly, your initial reaction to 7.1. 2, I think we're all debating about what the next 2 or 3 quarters could look like. I'm taking a leaf from what could happen to exports if indeed what Vishal Sikka had to say at the Infosys analyst meet, that what Brexit is doing is raising a lot of uncertainty for exports for them as a company. It could be happening to the best of others as well. Because of Brexit and a few other international pressures, are exports under threat for the rest of the year, the growth number that I'm talking about?
Well, I think exports have been struggling for a few years now. In the last 2 months, actually, we've seen a slight upturn. At least the decline has stopped, and there's been a slight upturn in the last 2 months. But we have a lot of ground to recover to make up for the drop of the last 3 years, without question. Now, what's going to happen with exports will depend on the international market, no question. Brexit doesn't help, but I'm not so certain that exports are going to be they've never been a huge engine for Indian growth. They contribute to some extent, but they've never been a huge engine for Indian growth. I think domestic consumption is a much bigger driver of growth, and we're seeing the beginnings of demand picking up in more and more sectors. The good monsoon is helping that pick up as well, and I would have much greater confidence in the role that domestic demand will play in driving growth for our economy this year than the international market.
Yes, you're absolutely right, Mr. Forbes, that actually exports are not that significant for India as, say, for a country like Singapore. But the fact is that once the recovery takes shape, then we will see imports pick up, and in that case, if our exports don't grow in tandem to some extent, you will again find a huge problem of our current account deficit going out of order. So is it not important for us to correct the overvaluation in the exchange rate of the rupee?
So, manufacturing would benefit from a correction in the exchange rate. So would exports of all commodities. But At the end of the day, I think our ability to grow exports needs to be a long-term story of investing in technology, investing in market development, and investing in changing our industrial structure so that we have products that are increasingly out there that more and more of the world wants to buy.
Okay, I would have loved to go on with this, but afraid we are running out of time. Gentlemen, all of you, thank you so much for taking the time out and being with us today on this GDP coverage. And Maithili, thanks so much for joining in and being a part of this discussion as well. Out of time completely, but that's the headline for you. The Q1 FY17 GDP has grown at 7.1%, GVA at 7.3. So the reported GDP number, not exactly something that we would have liked, but most of our experts believing that these numbers would show a bit of a pickup going ahead as well. We've had a normal monsoon, plus the fact that consumption looks like set to move higher. So all in all, maybe going ahead, these numbers would improve as well. That is something that we are certainly hoping for as well. Keep in mind, just for the benefit of our viewers who are joining in, we are of course putting out all those individual performances as well. I think manufacturing at 9.1 was not disappointing by any stretch of imagination. We had a fairly decent performance when it came to services as well. Industry by and large was a bit disappointing, yes. So there were a few heres and a few theres, but that's the long and short of it. Maithili, this is after a while that I'm seeing you sound a lot more optimistic on a data point which has come in below estimates.
I usually am, that's true. That is true, but I said if you look at the disaggregated numbers, they're much more encouraging than the overall picture. So one needs to look a little at the granular picture, Neeraj. So yes, as I said, I'm playing quite out of character and being optimistic.
No, why I said this, because we don't have the reported number which is above estimates. It's come in slightly below estimates. Yet you're choosing to look at the bright side. Is it because of a normal monsoon and the pickup due to the boost in consumption? Would that be the primary reason, Maithili?
No, essentially because I said, see, agriculture necessarily will definitely do better than the 1.8 that we've got for the first quarter. Similarly, services will definitely do better than the 9.6. So if two important sectors of the economy, which together contribute over 75%, in fact closer to 80% of the GDP, are going to grow at faster than what they've reported now, and manufacturing even maintains that number of 9.1%, there's no way but that the economy will cross 7.6 at the very least. So I'm looking at these numbers, I'm hanging on to that 9.1, because for me it's not just a number per se, but what it represents, because all the jobs necessarily have to come in manufacturing. They cannot come from agriculture, and services has a very limited opportunity to offer jobs. So I'm very heartened, because at the end of the day there's no point having jobless growth. So I really am quite heartened by today's numbers.
Great. Good to see you like that, Maithili. Keep it up if you will. And of course, we'll
see, the market's looking up, GDP is looking up. What more do you want?
True, Maithili. True. But any case, we'll see you with a lot more discussions during the course of the week as well. Thanks so much for joining in this telecast as well. We have to wrap it up now. Take a break. Come back with more news and updates.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.